G'day, mate. Oh, yeah. 1, 2, 3. Testing. 1, 2, 3. 1, 2, 3, 4, 5. Hey, good morning, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money cannot afford to lose. Did you just lose charts? Wow, I think something funky's happening. Anyways, never risk money cannot afford to lose. Hey, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. We appreciate you. For your diamonds in the sky. TradersWay. Hey, that's pretty cool, right? I still can't. So anyways, whoa. I just lost the thingamabobber again. Something funky is happening. Anyways, I do these sessions Monday through Friday here at Forex.Today, starting 7:30 in the morning, New York time, a couple hours before the stock market opens. Back from Paris. Hey, Joe. Welcome back. So please get involved, ask questions, be part of the community. Hopefully you're posting trade plans every day so that you can increase your skills. Remember, it's the planning in advance that makes you a better trader, not just trading. So taking your time. I think honestly, konnichiwa. I think honestly, you could become a better trader without trading, but simply by planning trades over and over and over and over and over again. Because you can sit and just trade for years and not be a better trader. You could golf 3 times a week for 15 years and not become a significantly better golfer. Plan is probably a better process. So I look forward to seeing your, there's something really funky is going on. So I'm sharing my screen, except it's not sharing the screen. So anyways, let's try this again. Create poll, YouTube, call to action, open presentation, show whiteboard, share your screen. One of those funky days. It thinks I'm sharing, but I'm not sharing. There we go. Let's try it again. All right. Please confirm that you can see my charts. Cool. All right. Let's dive right in. So one of the things I'm looking at here on a 15-minute chart is sort of a pattern like this. Can you see it? On a 15-minute chart, this is pretty significant because we're trying to make higher highs and we cannot make higher lows. In fact, not only are we not making higher highs, we're actually printing a lower low. Then you look at the oscillator. What does that mean? It means down for a couple of hours, right? Until we get to that part. So I think what it's going to do is flap around like a fish out of water into this lower part. So down to the 55. And then up into the top of a range. Why am I assuming such a thing and not a collapse? Why do I say consolidate, not collapse? Eh? Well, there is a lower low. Because I'm a bull. Why would it collapse? Yeah, my bias. Right? So that's what. But with that being said, we do have an area previously identified as resistance, like. We're not quite there yet, but we're getting gosh darn close, aren't we? So doesn't it kind of feel like up for today kind of thing? Down for till Friday and then up or something like that? Tristan says, hope you have a better day than I. Okay. So anyways, we're still there's two there and one here. You see that? And look at all the stops. Yeah. I'm cruising up, bruising. I'm never losing. I'm in my car going fast, and this is what I'm doing. Yeah. Around the way is where I'm from, and I'm from Manhattan, and I'm not a bum. Skirt chasing, free base, and killing every villain, right? Yeah, look at that. Can't lose money. Love it. Pulled out the jammy, aimed it at the sky. Isn't that cool? So you got to be happy. So we'll see if this consolidates here or not. Definitely toppish, right? So let's see what New York does for us. Back down to 81 and then back and then go challenge 82 or something like that. Yeah, why not? I'm good at that. So let's see how New York plays out for us, huh? Oil, just hanging around. So we had this area up here. I believe we talked about it. I don't even know what date it is. Is it Tuesday today? Yeah, Tuesday today. Fed meeting starts today, right? Tomorrow. All right. So anyways, we talked about this yesterday. This price here at 50.50 is a sell zone if you're a bear. It dropped like a ton of bricks yesterday. Only $1. And then recovered and we're back here again. Doesn't change anything. Still resistance. It's still where a bear should sell. You know, where else would a bear sell? And the only thing I could think of is you sold this up on the rally. I'm not sure if you would have gotten an entry though. But I can understand that. Down, roll, reversal, down. Either way, this is a sell in here. This is a sell in here. Yeah, no, actually helps if I use my vocal cords. Sound is great, sound is grand, sound is good. Okay, so anyways, I'm still thinking 45 to 55 is our range. Do we have any news coming out today? Any news? Just some housing stuff. Yeah. So it's going to be good, right? Nah. Robert. I don't even know what that means. Nah. Euro took a dive. Good, you can have it. Yeah, Robert. No, I get it. It's sort of nah. It's like I don't know, ethnic New York or something. I don't know. I don't even know what that means, but. So, if you're a bull, based on our trade plan yesterday, you're at an area where you can consider buying. It's already given you a bounce. Look at that. Isn't that beautiful? Bounce. Look at it. Chow, wow, 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 wow. Like a bowling ball dropping onto a trampoline. Hey, that real estate number, was last month a good number or a bad number? Yeah. It was like, what, -4 or something? Yeah, there you go, 4.8. See Ryan? Ryan's on it. I got it up here, though. -4 something. Yeah, all right, -4.8. Cool. So, this month will be better. Next month will be worse. Why? Well, this month's going to be better because last month was so bad. It'd really have to be significantly bad to be like -5% this last month. So even worse than last month? Nah, it's going to be relatively better. Okay? But the logic isn't going to be the same for next month. Because you could say, well, then this month would be so much better than last month, so therefore it can't possibly be that good, especially being that month. So, no. So why next month not as good as this month, and this month going to be better than last month? Last month being bad just makes this one on par. If it's on par, it's better than being bad, so it'll be good. So why next month bad? If you take all, okay, first of all, 2 hurricanes. One word, 2 hurricanes. I got one word for you, 2 hurricanes. Okay. So, do you like, what do you do during a hurricane and you're a builder? You're like halfway through building a brand new building and a hurricane comes through. Kind of messes things up, right? and you might have to restart depending on the damage. But what if let's say it's not really that damage. Let's say it was very inconvenient stuff, but there was damage other parts around you. You can't even get a home inspector out to get your permit because he's over there doing other stuff in the severely damaged areas. Or the cost of lumber just went up 100% overnight. Or half your crew left because their houses are destroyed, or they're getting cash gigs down the street, or they've now become instead of being your framer, now they're a master builder for somebody, right? You know what I mean? So if you look at, let's say, Texas and Florida, what percentage of housing starts do they typically represent as far as just the national picture? Just those two states, how much of the nation do they represent for housing starts? John does know. Anybody? Is it a big deal? Percentage-wise. Daniel says big percentage. Yeah. Okay. That's relative. Anybody? 25%. Thank you, Joe. Joe, did you guess or did you know? No, it's 25. Yeah, Joe got it. That's the exact number. Texas housing and Florida housing put together represents 25% of the entire industry. So let's just say it's not going to help the numbers next month to have 2 hurricanes. So I'm just throwing it out there like, meh. Maybe it has a negative impact next month. I don't know. I don't know. Just could be. Probably. Yeah. Hey, look at this. We hit our target and stopped. Brandon, you can do whatever you want with that knowledge. No, but what I mean is, if you were going to start building, how about this? All right. So who asked the question? Okay, great. All right. You've decided you're going to build your dream house. You signed a contract and everything to work with the builder. Builder's coming out. Well, yeah, builder's going to come out in 3 weeks to start building. Great. Today a hurricane comes in. Wipes out half your city. Now you find out the cost of labor is tripled, the cost of lumber is tripled. And even then, it's going to be hard to get some of the supplies. So there may be delays as you go into winter. What do you do, Greg? Gregorama? Do you just say, whoa, why don't we just put this on hold for 6 months, start in the spring when prices come back down and demand isn't so high? Because people are just taking your lumber to do fix-it jobs. You know what I mean? Dude, can read this. No, but I'm talking about you as someone that's going to build a dream house. Look, you're like, look, I get it. Lumber's up because demand is up, because supply is gone, because the hurricane's been an abnormal singularity the lumber price continuum. So once you get past this hurricane stuff and all the like houses that are severely damaged, they need to get fixed now. You know what I mean? So all of a sudden all the workers are over there just building houses that have been damaged but are, you know what I mean? So all of a sudden the workers are over there doing all these quick jobs, trying to bang things up, but they're going to be busy for the next 2 or 3 months. So why don't you wait for all that stuff to get cleared up? And all of a sudden those guys are coming back. And, you know, supplies of lumber have normalized and prices have come back down. And you're like, okay, now let's start. Okay? So it's just, imagine the supply and demand curves of such things as labor. Supply is going to be constant, unless you want to count like migrant and stuff. But let's just say the supply of construction workers is fixed. Demand just skyrocketed because 400% more houses suddenly need work on. Done. You know what I mean? So you wait for that demand to wane so that you get back to the equilibrium point where you were when you planned your project. You see what I mean? So that's going to affect starts. Yeah. I think people are just not going to start. All right, okay, going back to Australia. Cool. Check that out. There's our target from 2 weeks ago. We've hit it and now triple topped at the target. Come on, man. That's a high five right there. That's some sweetness. Going out to the higher time frame, that's where we are. So the target on Aussie, I know you already know this, but let's talk about it, is 92. So you should have been buying since about 85. When did we hit 85? Yeah, the third week of August. So anyways, got to try to find the strength and the courage to get above that price level. 88. Ooh, wow. Yeah, all right. Yeah. It's good. Oh, it made me think about swing, and swing made me think. All right, so did everybody get the email? On Friday, we had talked about people, I think 3 people asked about the coupon code for the training course. And then I said I would do it, and then 3 more people, so a total of 6 people. Wayne, can people join TradersWay from Australia? Give them a call, find out. You do that? Cool. So the surprise is I also made the coupon code work for the fundamentals course. Ryan had recommended it yesterday. So when I was doing the coupon code, I said, you know what, I'll throw in that fundamentals one. So you can do the fundamentals or the swing. each one works for the 382 discount. If you didn't get the email, all you have to do is call, email, or chat with TradersWay support. TradersWay support has the coupon code for you. Now Tristan says we'll be doing both. Then you might as well just go with the, there's a bundled package that saves you 55%. So 55% is going to be better than 382. So you can do, right? So just go to fxbootcamp.com for that. So any questions? Yeah, I didn't want to make a sales pitch. I never like sales pitches. So you asked for it. I did it. Sorry, it took me till Monday. I said I'd do it on Friday, but it's all videos, Brady. fxbootcamp.com. So you're going to have to ask questions now, otherwise I'm going to move on. On Discord, man. What? Just online videos. It's a video train. Go to fxbootcamp.com. You'll find it. Disc. It's amazing. It's great. No, it reminded me that there used to be times that you could do that. Yeah. Okay. So let's go on to that. That's some good analysis. Maybe we get a breakout. Maybe we don't. Gold. Yeah, let's just switch over to gold. And we made a big stink about this yesterday, but it was on its way to the 200 EMA, but we were still like up here, right? So anyways, now we're at the 200 EMA, and it stopped. Isn't that nice? Yeah, I'm 500 floppy disks. Yeah, look. You know, I think there's 25 hours of videos, of which 14 hours must just be the swing and the fundamentals courses. Wouldn't want to put those on floppy. So anyways, guys, going back to the analysis, we had this fair market value as a target. Remember, 200 EMA is a target, not an entry. So now we hit the target, and it stopped, and now it's oversold, and it's not making lower lows. So I don't have to look at the candles. That's what the oscillator tells me. And if that's not helpful, then get rid of it and just look at the candles. If this next candle makes a higher high, then we're going to be back in the trade zone. Huh? So for those that are signing up for the swing trading course, you would look at this and see the counter trend trade. Obvious. Cool. USD yen. I bet you there are tons of people that have no idea why we couldn't break 112 on the USD yen. Scratching their head. Turns out it's the monthly M4. What do you do at the monthly M4? You take profit on your longs and get out of the trade. Huh. Turns out you should just know how to swing trade, because now you'd know where the bigger traders are going to get out. See, remember, you need to start at the high time frames, bigger trades, and work your way down tactically. Because when you look at the fundamentals, when you look at the long-term technicals, what you're doing is creating strategy. So it's one of these things where you look at this and it's just factual, you cannot buy. It's not an opinion. Unless you want to make a career of buying at resistance. I highly suggest Credit Suisse. They'll hire you. They love buying at resistance. They love it. Yeah. No, it's not a Swiss joke. I actually used to track their trading. I'd see their real-time trades. They suck. But I have a feeling that they're winning somehow. Their clients might be losing money, but maybe their clients don't care. Somehow I think they're benefiting because they have a lot of money and somehow they're horrible traders. Ryan, did you ever sign up for that service? Yeah. I don't even remember. It doesn't even matter. It wasn't helpful in any way. Yeah, no, honestly, I don't remember. It was something, I don't remember, and I paid a couple $100 a month or something, I think. I don't know. Oh, yeah, EFX. Yeah, that sounds right. Somebody tell, I can't, the chat keeps moving along, but someone's having trouble with sound. One thing I would suggest is turn your Bluetooth off. You may find that you have sound blaring through some Bluetooth headset somewhere in the other room. Have you ever done that? Hello? What? I can't hear. Hello? Hello? Meanwhile, your Beats headset's exploding. $300 well spent. So anyways, going back to this, right? We're at resistance, right? Wouldn't you agree? Weekly, like, so for example, that is the target for the month of September. It's just that. Okay. And the funny thing is, this was the projected low first. I'll put a vertical line. The first day of the month is about here. All right. So looking at this again, this is the projected high for the month. Down here is the projected low for the month. What? That's the projected low for the month of September? That's the projected high for the month of September? What you talking about, Willis? I mean, dude, can you imagine shorting down here? Isn't that funny? Yeah. This is where you say, bring me your gold, bring me your wine, bring me your virgins, or I'll make the sun go away. And you happen to do this on the morning of a solar eclipse, right? And then you go back to your little hut and you're like, I'm so glad I have this book that outlines all the solar and lunar eclipses. Thank goodness I have this information. Right? I mean, you're like, look at all my... So great information to have, don't you think? So we have this heading down. We hit our target. And notice it's a weekly and monthly cluster of support. Like, who could possibly sell it after that? Right? Imagine it. You're at weekly and monthly support. What happens when the market falls to weekly and monthly support clusters? What happens? I don't know. It tends to be a place of plausible reversal. Well, see, we got to be careful. It doesn't necessarily have to go up, but it should stop falling. It probably will stop falling. And therein lies the change in trend that can be born, right? So now we're up here. Who could possibly buy the USD yen at a cluster of monthly and weekly resistance? Who would buy that? Somebody that doesn't know. That's all. Missed it. Oops. Is it plausible that something like this is next? It's plausible, doesn't have to happen. Do we have any risk on risk in front of this type of trade? FOMC, thank you, Artem. Yes, correct. So the fundamentals will supersede this technical. Okay? If the Fed indicates that they're going to be aggressive trimming down their balance sheet, nobody gives a damn about your monthly M4 112, weekly R1 cluster. Fundamentals will just destroy that one way or the other. It's either going to drop, it's going to rise. It has nothing to do with your chart. Yeah, I hope so too, Ryan. I monetized an asset, and the 10-year was at 2.2, I think. 2.1 something, and then the North Korea thing happened, and it dropped to 2.0 again. I'm like, oh man, no, right? Now we're back up to 2.2, and I'm like, yeah, got it. Real fundamentals. That looked weird. I'm like, do I have a broken thumb? So now we're back to real fundamentals. And as long as it's, more than 2.15, I think that's about my break-even point. The day I sort of monetize it. So anyway, so it should be on its way. Up, 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 up. That's good for me. You got to, right? Cheap money. So we're supposed to be on our way to 3.0 in the next 18 months. Do you have an 18-month outlook? See, if you have an 18-month outlook, you're making decisions and you're probably making money. Right? I mean, how does one make money when you can't have a plan? Where you're like, I don't know what's going to happen. I barely know what's going on now, but like in a month, 6 months, a year, 2 years, I just have no idea. Well, if you have no idea, there's no way you can possibly make money, right? But if you could predict the future, couldn't you make money? If you knew the future, could you make money? Then why don't you do it? Not make money, predict the future. Wouldn't you start with that? Look, if I could predict the future, money would just rain out of the sky. All right, good. Go ahead, then do it. Predict the future. That's all it takes. No, Wayne, I want to trade the 5-minute chart. I'm stuck in the 5-minute chart, Wayne. I hate the future. I'm in the now all the time. You know what I mean? I'm just here now. I think the logic is if you get in and out quick, you don't lose a lot of money. But I will tell you, you'll probably die 1,000 lashes. Right? But how do you want to be taken out? An RPG or a steak knife? 1,000 stabs. Blah, 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 blah. I'm not done. You know, so I don't know. I don't know what that analogy even means. Right, so Ryan says 10-year falling, that means rates higher. So that's funny, where the Fed's not going to raise interest rates, but they're going to sell a bunch of bonds. Wait, isn't that the same as raising interest rates? You know what I mean? Right. What's the difference? Because when they bought bonds and increased their balance sheet, didn't that lower interest rates? So isn't it great that they're not raising interest rates, they're only selling bonds? So if you took the fundamentals course, you would do things like, well, that's an OMO. Oh, no, you didn't, right? You're like, that smells like an OMO to me. And if you're a seller, that could shift the money supply. So if we're shifting the money supply curve, wouldn't it? And then you're like, so that message is very confusing. What do you mean you're not? What do you mean you're not raising interest rates? So anyways, it's cool. So enjoy the fundamentals course. If you're taking it, that coupon code dies in a few days. So But we can have some fun conversation if you know what you're talking about. Cool. So anyways, there's that. Peso. You know the peso, I think it just dropped, hit our target and stopped, right? Yeah, there it is. Nice. Don't you love it? What's the plan with peso? Sell in here. It's like complaining, right? You're like, Wayne, I only made $1,000 on that. It's not even worth my time. It's not even worth my time, Wayne. $1,000. What am I going to do with $1,000? Stupid peso. Once again, isn't it nice predicting the future? If you knew it was going to fall, would you sell it? Right? If you knew this was going to fall, why wouldn't you sell it? Remember the month before that? We knew it wasn't going to fall. And it didn't. Predicting the future, that means malice aforethought, thinking ahead, destructively. Profit in the first degree. You know what malice aforethought is? It's the difference between murder and manslaughter. Or murder and you go to jail for 10 years, and murder and you go to jail for 30 years. Malice aforethought means you intended to do harm. You thought about it, you planned it, you carried it out. Versus just going in a fit of rage and just reacting. Well, that's still bad, but you didn't think of it ahead of time. That's right. Thank you, Ryan. Congratulations with your success, too. Of course you do. Yeah, but see, the way I look at it is then you deserve your filthy, stinking, rich success. Right? Everyone's like, look at that Ryan. He thinks he's such a big shot with all his money and his success. And you're like, damn straight. I can sleep at night, bro. Not a problem. That's why the hard work is worth it. Plus, you know it's going to stick around. A lot of people blow up their trading account after they find success. And what I see and what I've heard, you remember, I've met, what, 40,000 currency traders over the last 12 years? Like tens of thousands. So, you know, I've been around, bro, right? What happens with a lot of people is they find success and they don't believe it's going to stay. And subconsciously, self-sabotage kicks in because they don't believe it's going to stay. They feel like they got lucky. And it's like a golfer that's got a 6-foot putt for $1 million prize and for instant fame and endorsements and free rides for all the future tournaments. All he has to do is make a 6-foot putt. What does the guy think? Or the gal? What does the golfer say? Don't miss it left. Don't miss it left. Don't miss it left. I always miss it left. Don't miss left. I'm going to miss it left. I'm going. So you miss right. And that's it. And you're like, ah! There's ah! You talk yourself into failure because it was luck. The hard work, the blood, sweat, and tears for years is important because you don't think it's luck. You believe you deserve it, not deserve, like the bad deserve. Like you know statistically, for example, your success rate. I mean, it's just you've earned it. It's a skill now. You know what I mean? It's a skill. You're not shocked by the success. You can sleep at night like, you got this. And there's a big difference. You know what I mean? There's a big difference where you're like, I got this. No self-sabotage. So, what an amazing shock. The pound dollar's going up off the support we drew yesterday. And we have this going up from this level. Boy, it's so much easier when you can predict the future, isn't it? Isn't it easier when you're looking at a monthly pivot and a daily pivot and a weekly pivot, all providing support at a Fibonacci level? And you have plans to buy here, and if that doesn't work, you'll buy down here. Wait, we already did all this, so this should be easy, right? But you say, yeah, but I don't like buying at support at the London Open. Was it down Tuesdays, 2 in a row? Yeah, so if it's down again, that might start impacting NFP. Because, the construction industry is important to NFP, isn't it? Cool, man. Cool beans. You never close your eyes anymore when I kiss your hips. Well, we're firmly in that pivot profit zone. Look at this. We didn't finish it, did we? I'm sorry. Higher high. Roll reversal. Okay. You see it here. So now what? Higher high. Some sort of roll reversal. Now obviously that pivot's probably going to be pretty close. So the other way of doing it, of course, is like what? Fib it. So new higher high, fib that. We'll do it like that. New higher high, fib that. Rinse and repeat every time. Fib, 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 fib. It's beautiful, huh? Look at all that resistance up there. Lots of support in here too, huh? Hallelujah. Gorgeous. Just kind of zipping around. What's this all about? Looks pretty good. I don't remember it. Looks pretty good. We must have been talking about something in here, huh? That predicts 92. You know what? We did the same analysis on a different chart, didn't we? Did I say that? That should go to 92. And all of a sudden we're like, oh, 92. Different chart, though. Good. Glad I agree with myself. So some yen weakening, some not much of anything. So hopefully a breakout here, right? I think we had this set like this earlier, didn't we? So maybe this is going to come around. And it reminds me that it's not so bad. Just looking around, just playing with it. Could be change, right? Remember, we were talking about earning. We were trying to figure out the return the annual yield, and we based it on margin of 750 bucks, but the margin was just barely over 500 bucks. So I think the yield was something like 150% a year. It's a pretty good bond. If you look at it like a bond, if I just jam the stop and walk away, see you in a year, see you in 5 years, it'd be pretty sweet though, wouldn't it? 150% yield. It's pretty nice annual yield. But it might only be 100% per year. You know, like Wayne, I like to have more, please. It's just not good enough. So there's Kiwi yen. Let's see if it holds up. I'm trying to measure if this is a change of trend, right? Lower low, lower high, lower low, lower high, higher low, higher high. Zippity doo dah, zippity yay. I think that's what we were hoping for, right? I think on the other chart, weren't we playing a 55? I don't have a 55 on here. Oops. Okay, insert indicator, trend, moving average. Let's make it a 55. Exponential, let's make it blue. Make it bold. So in a couple of candles, you'll see it'll come up and it'll touch that. Cool. Then I guess we got lucky on that one, bro. Predicted the future. So somebody says that they back test for 2 hours a day. The problem with back testing, and I'm not sure your definition of back testing, but you might look at a chart and see that this 55, 3 hours from now, is actually touching that wick, and this will probably be touching that wick, or this real body, right? And you'll say to yourself, when it touches the 55, buy it. And what you're missing is it didn't touch it when you should have bought it. But they adjust over time. They lag, right? So it's like if you shot at a deer that's running, unless it's running straight at you, you're going to need to adjust. You have to aim in front of the deer. And it's even more difficult when you're shooting at rabbits with a rifle. You got to shoot in front of a moving target. That's one of the challenges in trading. Hey, look at that! We're making money. Look at that. So, anyways, so backtesting, sometimes you don't get that because you're kind of looking at old perfect data. Okay. So anyways, will you be here tomorrow? Garbage in, garbage out. Cool. Adam's working, huh? Same gig, Adam? Yep. It's like shoveling sand, huh? Like, how's it going? Well, I'm working really hard. It doesn't feel like I'm making a ton of progress. There's still a lot of Sahara to go. Anyways. Cool, PJ. We're talking about the OMOs. The Fed's not raising interest rates. They're only selling bonds. Smells like an OMO. So I'll see you guys tomorrow. Frank, who's doing the coupon codes? John, you got ignored? Oh, you're already in, Brady? Right on. Oh, really? USD CAD weekly? You know, it's hard to do a webinar and read, especially as the chat goes by so fast because I have to have the text larger. You say a weekly bullish take profit zone and a monthly take profit zone. What would a CAD bear do? Yeah. Yeah, no. If you're there, what did you say, a USD CAD? I mean, look, if it's support, it's support. What do you do the rest of the week? Volunteer. USD CAD, right? Let me see what you got. Yeah, go. So now, see, now I have to scroll back up to read your question. USD CAD is at weekly take profit zone and in monthly bearish take profit zone. Yeah. So yeah, you might want to see if this acts as support. Play it off next week's pivots. So, right? So that's what you got to look at, John. It's like, well, you can buy in here because it is bullish support. And you do have the higher high. But you might have to wait till after FOMC. Faux show. Okay. Now in the smaller time frame, you can see there's, you know, little action going on. So it just really depends if you're a bull or a bear. Okay. See, this looks bullish to me. You know what I mean? Okay. So as long as, like, soon as this happened, it's no longer bearish, right? But isn't that when I took profit on the trades? Do you remember, like, CAD yen was at monthly and weekly take profit? And I'm like, I have to take profit, but I don't want to. That was a CAD long, which would have, you know. So anyway, so around here, look at this. All of a sudden, double bottom, higher high, higher low, higher high, 450. I was up like 5 something, but I only got 450. But I had to because it was stuff like this. I'm like, I have to. I don't want to, but I have to. So as soon as I got on my CAD yen, look at this, the USD CAD stopped falling. So anyways, if you're a bear now, you kind of want to get some better bearish price action going. Oops. What did I just do? I guess I'm over here now. Okay. I mean, if you were a bear and you want, you certainly would want some like hardcore, we're no longer bullish scenario, right? You're a bear on CAD and bull on USD. Okay. Okay, now FOMC is definitely going to affect you, right? So you don't know what FOMC is going to do. So, but maybe today, maybe London Open, maybe Asia, you get an opportunity to buy this at a roll reversal and pray, jam a stop. Okay, but what does this weekly tell you? Take your money and run. What does the monthly tell you? You should have been done trading 2 weeks ago. And you're like, oh, but Wayne, I could have just kept trading and trading. Right. I mean, look, it's very unfortunate. You would have been done trading the first or second week of the month and taken the rest of the month off. Yeah, that's very tragic. I'm going to mark this because that's going to be important. But yeah. So peace on earth. May the pips be with you. May our profits be above average. Thanks for being a client to TradersWay. Put your diamonds in the sky. I'll see you tomorrow.